about our regular stuff, our regular news and policy, truth to policy, all that good stuff. And I really get into the National Day of Prayer and I give some testimony of some powerful things the Lord has done. I was not planning on doing that, so it caught me a little off guard, but the Holy Spirit edged me to share that at the end of the video that came on right before this one. So you might want to go back and see the end of it if you want to see. The Holy Spirit completely kidnapped that entire life. I didn't talk about at all what I was supposed to talk about. So I'm here with you right now. Stock Market 101. Okay. I have a master's degree in accounting and finance. I have been a financial analyst and fraud examiner for over 20 years. As you know, I was an auditor for 2 U.S. Inspector Generals. Before that, I was an auditor in the commercial sector. I love to find fraud, waste, and abuse, and I love to audit. I read financial statements, and part of my training through getting my master's degree is I can do stock analysis. I can look at a company's financial statements, run the ratios, tell you if it's a good stock investment or not. I don't do that for a living. I really love fraud work, and I love finding fraud and fraud, waste, and abuse and auditing and stuff. I'm a geek. Okay, I'm a geek. Yes, I watch the financial sector all day long. I see what's happening, and today the stock market took a nosedive, over 1,000 points. Now, we've been talking about this for a while. However, I want to break this down really simple because some comments and some things I see in our networks, in our social media networks, there's not a basic understanding of what the stock market is. There's not a basic understanding of how the financial systems are really taking advantage of you. And it doesn't need to be that way. It really doesn't need to. We complain now about the indoctrination of our children. See, I'm still talking politics. I'm not. But no, we talk about the terrible things our children are being taught. Well, when we as baby boomers, yeah, I'm considered a baby boomer, I guess. When we were young, because most of y'all in here, most of y'all are over 40 or 45 or 50, and a lot of y'all over 60. When we were in school, when you were in school, when we were all in school, we're middle class. I grew up in Doraville in metro Atlanta. Very, very, very middle class. Lower middle class, if you will. When you're in school, you're taught to put your money in the bank. Save your money, have a savings account. Very wise thing to do. You want to have an emergency fund. But you're also taught to get a job and work for the same company your entire life. Hopefully they have a pension, which nobody has that now. But you get on the pension plan, or you get in, when pensions really started going away, the baby boomers were such a large population. I want to explain this to y'all because you need to see this. Baby boomers were such a huge population that the IRS looked at this and said, we want to encourage people to save their money, but we also know that when all these people retire, we're not going to be making income tax off them anymore. How are they going to be living? They really don't need to be just depending on the government, on Social Security. We need to give them an incentive to save their money. But this is the IRS now. Check this out, the way they set this up. The financial gurus that own all the big financial companies that manage your money right now, that are managing that 401k and managing that IRA, all those decades ago, they got together with the IRS and they said, why don't you let them put their money away pre-tax where they're not paying income tax on it? That'll make them happy. That will entice them to do it. They say, oh, you're lowering my taxes. Okay, I'll put money away and you're lowering my taxes. And you let them save up money in these 401ks. Comes out of their paycheck. They never see it. It's pre-tax. They feel like they're saving some money. They see a little thing growing and growing and growing. They have no idea what it's invested in. They have no control over what it's invested in. We, the big financial gurus out here, we're going to have money managers managing that money, moving those funds around, giving them a little bit of profit, letting them make, and you tell them if they are making 6 or 7%, they need to be really, really, really happy. We're going to make 20% on their money. Because we're going to make the company money, and we're going to make money, and all those fund managers are going to make money, and all those people are going to make money. But we'll give them 6 or 7%, and they'll be happy because we're going to teach them from when they're children that if you can just put a little bit away every year, if you can make 6 or 7%, you're doing really good. That's the way it was set up. And the IRS said, wait a minute, we got to get ours. The IRS said, all these people are going to retire and we're not going to be getting any income tax off of them. How can we get money on the back end? We will give them a tax break now, but when they start taking it out at retirement, that's when they got to pay the tax on it. Your 401ks, your IRAs, you don't pay tax on it until you take it out. They set it up like that for a reason. They're telling you you're saving money then, but when you look 20 years down the road, the taxes are going to be higher. So when you go to pull it out, hopefully you've been making that little 6 or 7%, or maybe a little bit more, a lot of y'all a little bit less. But it's growing and growing and growing. And if you do that for 20 or 25 or 30 years, you've got a nice retirement. The IRS says they call it mandatory required distribution. RMD, required mandatory distribution. It used to be when you hit 70 years old, or 69 and a half or 70, when you hit 70 years old, we're going to make you take a little bit out. Why? Because the IRS has got to have their tax money back. You got to take a little out, and we're going to tax you when you're taking it out. Now the taxes, you don't know what the taxes are going to be. The taxes may be higher, but they're going to take out a little bit at a time. You can't just sit on it and not take it out. They make you take it out. Now people are living longer. Now it's 72. If you turn at a certain age, it all depends on the age. You can Google it and find it, or I can tell you. Now it's 72. When you hit 72, you've got to start taking it out. Here's the trick. The stock market goes down like it's going down now, and it's being so volatile. If you're losing 20 and 30%, or even 12, 15%, if you don't have a big IRA, a big 401k or IRA, and you're losing that money, how long do you have to wait to make that money back? How many years is it going to take you to make back your losses? If you had $100,000 and say you had to take some out for an emergency during COVID, now the stock market's been going down, now you only have $60,000 left, you're going to be hitting retirement age in 8 years. How long is that $70,000 going to last? It's not. The government's going to require you to take out a little bit per year, or you're going to need it to supplement Social Security. Now you don't have enough money. That's what they call outliving your money. You don't have enough money. You're outliving your money. Stock market. IRS set it up decades ago. They say we're going to give you a tax break if you put it in these accounts so that we can, it's a good thing. They want you to save money. That's a good thing. The problem is everybody's making money on your money and you're making a little bit. But it's tax deferred. You don't pay, it gets to grow and grow and grow, and you pay tax when you take it out. Then later they came out with a thing called a Roth. The Roth is a little different. The Roth is post-tax. You've already paid tax on that money. You can take cash out of your bank and go buy a Roth. I've already paid tax on that money. But if you put it in a Roth, it grows tax-free. When you go to pull it out, you don't have taxes like you have on the IRA. So it's different. It's a little bit different. You can't blend them together. They're a little bit different. One is money that has never had taxes paying on it. One is money that's already had taxes paying on it, but they're going to let you grow your money tax deferred or tax free in a lot of cases. Okay? So that's the difference between those two. Now, stocks. What the heck is the stocks? Okay. This is a very fundamental thing that I really want you guys to know, because I hear the craziest stuff. I hate conspiracy theories. I hear the craziest stuff. I want you to understand what this actually is. If you own a company, you privately own a company, that company is yours. You're responsible for the bills going out. You're responsible for the money that you make, and hopefully you make a profit. Any profit that you make, if you're a sole proprietor or if you're, just a SRC, if you're a single, if you're the only person that owns it, or even if you have a partnership, if I'm the only one that owns a company, any money that makes, okay, that's me. We've got a partnership split between the partners. Now you go out and you say, I need to raise money for my company. I need to buy some equipment. I need to buy some inventory. I'm ready to expand. I want to open offices in other cities. I'm going to do really well. I'm going to expand my business. I need other shareholders to come in and to give money into the business. I have to convince them that I'm going to make them money. And I need to convince people to invest money in my business so that I can grow. And then as I make profit, I'm going to share the profits with the people who've invested in my company. I'm going to share the profits. Those are called shareholders. They have a share of your company. Okay? Now, if you're going to have a big company and you say, I want everybody that believes in my company, if everybody that believes in my company wants to invest in my company because they believe I'm going to make money and they want a piece of it, I can have a lot of shareholders. You want to really go big, you go public, which means you're not allowing just your friends and family to be shareholders and investors to be shareholders. You're going to put it out to the public. If you're Caterpillar, I'm just giving you an example. Say you're a company, you go public. Okay, now Caterpillar is a big company. They're international now. If you believe in Caterpillar, I believe in Caterpillar. If you believe in Caterpillar, you can buy stock in Caterpillar. My father, back way in the day in Atlanta, in North Atlanta, everybody had these little family-owned hardware stores everywhere. This guy in Atlanta said he was going to make a big mega hardware store, get rid of all the little mom and pop hardware stores and have this great big monster hardware store that was going to serve the contractors and have sheetrock and have lumber. It was going to have lighting. It was going to have everything you can imagine that not only the contractors needed, but consumers could go on and buy anything they could possibly need. And it was going to be like a Walmart just of hardware and building supplies. It was going to be called Home Depot. My father got wind of that, and his buddies told him about that, and him and his buddies got in when Home Depot went public. He bought it in the very, very, very beginning because he believed in it, and he believed that company was going to make money. He worked for 3M. 3M gave him stock. He also reinvested some money into the stock and had a bunch of 3M stock. The 3M stock, because it's a major conglomerate, so he's a stockholder. You own a little piece of the company. Some stocks pay dividends. What does that mean? That means if you own stock in like 3M and some of these big boys, they not only try to keep your stock price up, but it's kind of a profit sharing. They'll pay you dividends. There are some senior citizens that bought these big company stocks way back, and now there's been stocks, it's added up and added up and added up. They get big dividend checks, and some people live off those dividend checks along with their Social Security. Now, you had to have a lot of stock that you bought really early if you're going to be that, because dividends, it's a whole nother picture. But think about it. Back in the day, you believed in a company and you bought the stock in the company because you believed the company was going to be successful. Now you're a stockholder. You own part of that. So my father made a lot of he did really, really well because that Home Depot, he bought it when it first came out. All those years, all those decades. Yeah, he made a lot of money on Home Depot. Used that for his retirement. It was just straight stock. It wasn't an IRA or anything. 3M did pretty good with 3M. He retired very well off his dividends at 3M and his profits from his. Whenever he needed money, he'd go sell some Home Depot stock because he had a ton of it. Okay, so that's what it means to be a stockholder, and that's what it is in the stock market. It's a market where you go and buy stock. Some of you guys are like, why is she telling us this? This is pretty good. There's a reason I'm telling you this. Because it evolved into these big fund managers over the IRAs and the 401ks and the Roths. They said, we want to package together a bunch of stock. We're not going to have like one company. Our company for our employees is not going to have one company, because what happens if that one company gets in trouble and the stock goes down? We got to protect our employees' retirements. So we're going to put together these mutual funds. They put together the mutual funds so that you had a wide diversification, a wide selection of stocks, all in one fund. So some of it might be in the gas sector, some of it might be in utilities, some of it might be in big tech, S&P 500, the Dow Jones, a little bit of everything in a fund, balanced. They try to keep them balanced so that if one sector of the market went crazy and went down, the other ones would level it off so you didn't lose too much. That's called being diversified. That just means you don't have all your eggs in one basket. You've got to have a good selection. If I had nothing but oil and gas stocks, when Biden came in, I might have lost a lot of money. If I had just one thing, like 3M just took a big tumble today. Okay? So the mutual funds were set up for the 401ks, the IRAs, that kind of thing. When you have a mutual fund, you are a stockholder. You own stocks. But when you own stocks in those mutual funds, you don't know who you own. You could own somebody you completely disagree with. You could have Nike. You could have Chase, Coca-Cola. You could have all these woke companies in your mutual fund. You don't even know it. And you are actually an owner of those stocks, which means you are a tiny little partial owner of that company. If that company does well and they make profit, the value of the stock goes up. If they mess up and take big losses, for instance, who was it? BP had to take a multi-million-dollar write-off off their financials because they pulled out of Russia. And they had these big projects going on in Russia they had invested in, and they pulled out of Russia. They had to take a big hit. Okay? It's going to take a hit on their stocks. Because your stock price is the value of your share. If the company's doing really, really good and they're making money and they're making profit, your stock price goes up. The stockholders elect the board of directors of the company that make the decisions in the company. The big stockholders that own a lot of stock, this is what Elon Musk did when he tried to buy Twitter. He got on the board and they said, oh, wait a minute. If I get on the board, I can only own so much percentage. There's 9 other people on this board. I'm not going to have any say in what's going on. You have a board of directors. The board of directors is making the decisions. The only decisions the board of directors make, they have a fiduciary responsibility to make sure that that company keeps that stock price high. They are basically compensated on keeping that stock price high. They cannot make any stupid decisions that would make a big financial hurt on the company and the stock price goes down, which means the value of the company goes down, which means now the company has less value. It has less assets to be able to go out and do projects or to buy new inventory or to expand. If your stock goes down 10, 15%, you might be canceling that new project you were about to do. You might be canceling your expansion. If you are a stockholder and you own stock in that company and they make a mistake, you might have a $30 stock. All of a sudden, it's only worth $25. You just lost $5 a share. So you have people who manage these stocks and manage these funds and are big investors. I will give you an example that is on everybody's talking about right now is Berkshire Hathaway. Berkshire Hathaway is like a mega fund. They have mega investors that give money, and Berkshire Hathaway says we're going to invest in this, and this. They know how to pick them. They know how to make money. They know which companies to pick and how they know what companies to pick, and they see the stock prices go up, and anybody who's in those funds makes money. They own Geico. They own the majority of a lot of companies that you know and you probably do business with. Berkshire Hathaway is not going to do anything that's going to make the stock price go down. They are not going to do anything that's going to hurt capitalism, because their whole function is to make money for their investors. The only way you make money for your investors is to keep that stock market rolling. Now, if you know somebody is about to take a hit, you can bet the other way, because it really is a gamble. You can bet the other way, and they call that a short. I don't want to get in the weeds, but you can make a lot of money by saying, I know that company is about to lose a lot of money. I'm going to buy it at the set price, and when it drops down, I make money. It's weird. There's all kinds of crazy things to it, but people make money just trading those stocks in all kinds of crazy ways. That doesn't matter to you right now, because you're just sitting there putting 4% of your paycheck into that 401k, and you really don't know where it's going. Your 401k is sitting there, you're putting it in, or you did put it in, you're already retired. Once you leave that company, you retire or you quit or you change jobs, that 401k has to roll over into an IRA, individual retirement account. A 401k means you're still working for the company or the teachers or the whatevers. When you leave, you go from the company 401k, you have to do what's called a rollover and roll it over, which means you're not taking the money out, you're not going to pay taxes. You don't do that. Don't do that. You roll it over to a individual retirement account, which means you're no longer with the company, individual retirement account, now it's an IRA. Now, the people, all Fidelity, all these, T. Rowe Price, all these guys, they want to capture that because they're going to make money on your money. So if you leave your company, they want to grab it and say, roll it over here. You don't worry about it. You don't know anything about this. You don't understand this. We're going to tell you what to do, and we're going to handle it for you. They make it complicated so you don't know what's going on, so they can control your money because they're making money on your money. They are giving you a little bit. Vanguard is probably one of the better ones that actually, people in the Vanguard funds do pretty well. They do better than a lot of the other funds. Let me just put it that way. Okay? So they're gonna take the company 401k, they're gonna roll it over into individual retirement account, which means it's yours, but they're really not gonna let you have it because they say, you don't understand it, you don't know anything about this, you just need to let us handle it, and you just stay there and let us handle your money. They constantly are moving those funds around, and every time they make a transaction, somebody's making money. Some of y'all get statements that are 15, 20 pages long, and it shows you all the transactions that were done. Transaction fees. They don't show you the fees up front. The fees are buried down in the funds. I know how to read the small print. When you guys send me your statements, which you do, I analyze them, and I can tell you right up front, they'll tell you you have this annual fee or money management fee or whatever. I've seen some people paying like $2,000 a year in their fees. But it's not just that. In every single one of those mutual funds, there's fees inside that mutual fund that you cannot see. Every time they're doing transactions, there's fees in there that you do not see. This is why these financial institutions have the highest skyscraper in the city. This is why they are so massive and so big, because they have millions of y'all that they're handling your 401ks, they're handling your IRAs, they're handling your Roths, and they're telling you, just don't worry about it, we'll handle it, and we'll make some money for you. They're giving you a part of it, and they're making money on your money. That is the stock market. But today, the stock market as a whole, the market where they sell the stocks, the stock market, there's big funds in there. It has been on a roller coaster ever since Biden took office. Trump had the stock market on a roar. Absolute roar. Everybody was pretty much making money because Trump got all the rules and regulations out from the company where they could get their projects done faster. The permits took less time. He took a lot of the red tape out that the Obama administration had put on so much red tape, it strangled the businesses. Trump got in there, knocked out the red tape, took so much of those regulations off of them, let the construction go forth, the projects go forth, and that's one reason our economy boomed, because they got the red tape out of the way and he helped the businesses expand. Biden comes in, puts the regulations back on, and has done everything, especially in our oil and gas sector, as you know, to put a stranglehold. Now, the cost, with all this Green New Deal stuff, the cost of doing business for businesses has gotten so unstable and so bad. This is why the stock market's in a roller coaster. Every week, a different set of companies has an earnings report that comes out, and when that earnings report comes out and shows their profitability, and it's not what that people were expecting, stock goes down. Things that happen with China, things that happen with Russia, things that happen with the price of oil, all has an impact. There's so many things that have an impact on the stock market. What the Fed did today, the Fed yesterday, I guess it was, raised interest rates by 5%, by 0.5%, 0.5%. 0.5 basis points is 0.5%, 0.5%. So your interest rates are going up. If you're going to buy a house and you didn't get a fixed rate and you hadn't pre-qualified and done your thing yet, your interest rate just went up. It's going to go up another 3/4 points in June, and it's going to go up another 3/4 points later. That has an impact on the stock market. Because I don't want to get in the weeds on that, so I'm going to stop. I'm going to stick to this. Okay. One of the major parts of the stock market, you have the Dow Jones Industrials, you have NASDAQ, which is the tech stocks, you have the S&P 500, which is Standard & Poor's 500, which is the big boys, the big old boys. A lot of those are the dividend paying guys. But you'll see they're called the indexes. Well, today they all took a tumble. Okay, and this has been going on, and I mention it once in a while. Okay, I hope this is helping y'all. The Dow Jones Industrial dropped over 1,000 points today. That is bad. It was serious. The major guys that are in that is Coca-Cola, Chevron, Verizon, IBM, Walmart, Walgreens Alliance, Merck, Procter & Gamble, Intel, Travelers Insurance, McDonald's, Johnson & Johnson, JP Morgan Chase, Caterpillar, I like Caterpillar, United Health, American Express, Disney, 3M, Dow Inc., Dow Incorporated, Honeywell, Goldman Sachs, Boeing, Visa, Microsoft, Home Depot, Apple, Nike, and Salesforce.com, to name a few. Every one of those companies lost double digits, between 10% and 13% of the value of the company. That's billions of dollars. Billions of dollars. That's shocking to the system. They were hoping it was going to come back. That is a big loss. That's a big loss. That is the value in the capital you have available. It affects everything. And if people see your stock price going and they get out of the market and they pull out, the more people that pull out, the further down it goes. So, if you think it's going to go down further, which I personally think it is, if you want to stop taking your losses, you get out. Now, a lot of people will tell you, and especially all the people who are making money on your money, will tell you if you don't have individual stocks and you got mutual funds, there's somebody making money on you. Now, they will tell you to write it out. Just write it out. Because we're going down now, but it's going to come back, and it'll come back. How many years is it going to take to come back? How many years do you have to gain back losses? You following me? I hope y'all are following me. If you say that some company is involved in trying to bring down our government and bring down capitalism, I'm going to say that you're probably hearing a conspiracy theory, because the whole purpose of a company and the purpose of a board of directors is to keep the stock price up, is to increase the value of the company. You invest in projects so that you can grow, so that you can make more profit. You expand so that you can grow, so that you can make more profit, etc., etc., etc. There is no one that is going to make a decision or do anything political that's going to trash the stock price of the company. It doesn't make any sense. It's not logical. There's no logic, absolute no common sense to it. This is why the board of directors of Twitter, who did not want to sell to Elon Musk, he bought such a large piece, went on the board of directors, realizing he had no control. He wanted free speech on Twitter. He was tired of their censorship. He was tired of them banning people and blocking people and all the garbage that they do. And he had it, and he said, I believe in free speech. We have to have free speech to have a free democracy. I'm just going to take over the company, and I'm going to cut out all the censorship and quit banning people. Free speech on Twitter. The left lost their minds. The board of directors, who's all woke and left, they didn't want anything to do with it, and they did everything they could to block him. They turned down his offer. But then they realized that he's so brilliant, he had strategies that he was going to crash the stock price. If he crashed the stock price of Twitter, he had strategies he was going to do it. They individually, those men sitting on that board of directors, would have lost millions of dollars. And they're like, wait a minute, do I want to lose millions of dollars of my money and my family and my kids' money because I'm fighting this guy? I don't think I can win. I think we need to give it up. And they gave it up, and they're selling it to him. And it's going to take about 6 months for that process to happen. But he is buying Twitter. He's paying, I think, every shareholder like $54 a share. If you bought Twitter at $40 and he buys it at $54, you just made $14 a share. So you just made a little money. Okay, but it's going to take about 6 months for that to happen. When he buys it, it will be a privately held company. He'll own it. There will be no more stock in Twitter. It will not be a publicly held company, which means the public can't have shares in it, which means there's no board of directors, which means nobody has any say over what happens at Twitter except for the sole individual owner, which will be Elon Musk. And he has been very clear of what he's going to do, and that's freedom of speech, no censorship and no banning. And the conservatives are jumping up and down and happy and so glad we have freedom of speech. And the left has lost its mind. And they're spreading all these lies and crazy stuff about him. He's brilliant. He wants free speech. Go for it. Buy Twitter. Buy Facebook. I don't know. That's not going to happen, but you know. So anyway, that's how that whole thing works. So now, what do the wealthy do? The wealthy don't really have mutual funds that other people are managing their stuff. They might, but the wealthy go to these hedge funds where they have these really brilliant people that just pick certain stocks. They're not doing it for the public. They're only doing it for certain investors that make a lot of money. Now you don't have all these other people making money on your money. You've got one fund manager, one hedge fund manager that's helping you make money, and they're making a little bit, but they're dealing with such large numbers, they're rich. It's a whole different scenario when you're wealthy. Whole different scenario. Good old boys go out on the golf course, and I know this story personally. The good old boys go out on the golf course And one guy says, my business, my multi-million-dollar business, I really want to expand. I need to raise $2 million. I can pay, I know I'm going to make 50% return on that in profit, but I need to raise $2 million and I don't want to go to the bank. His buddies say, hey, I got $250,000 sitting over here. Somebody like my dad would say, I could sell some of my Home Depot stock and probably raise $250,000. I'm in. And he'll sit there with his buddies and raise $2 million to expand his business, and he'll give them all 20% return on their money every year. 20 or 30%. That is done every day, all the time. It's been done for decades. The wealthy are making 20 and 30% return on their money because they don't have anybody in the middle. They don't have all these middlemen making money on their money like all these mutual funds and all the people in the companies that are involved making money on that stuff. They're just straight making money. It's between them and the company. If Home Depot wasn't public and didn't offer public stock and just needed to raise $40 million and could do it, it's kind of hard to do. That's why they go public and they offer the stock publicly so that they can get millions of people to buy stock, and now they've raised all the money they need and they get to go be a big company and make all their little stockholders money. So, your 401k, your IRA, is in mutual funds, being moved around. A lot of people, a lot of different levels are all making money on it. When the stock market goes down like it did today, you lost money. The whole sector, they all went down. But this has been happening. In the first quarter of this year, which is January to April 1st, January, February, March to April 1st, first quarter of this year, was the biggest drop in all sectors of the stock market in the last 20 years. Everybody lost money in the first quarter of this year. Some of y'all lost a lot of money. Some of y'all don't even want to look because it makes you sick. Okay, that's the problem. Here's the solution. I'm going to give you a solution. First, I'm going to say how I'm going to see if there's anybody in here. I hope y'all are appreciating this and understanding this. I'm afraid we are headed to a severe depression. No, I would not say that we are headed to a recession. There is pretty much no doubt on that. Everyone is spending their money on gas and groceries. That is a very good point, Gail. That is a very good point. I can't really see who all's in here, but I hope you are really learning. I'm doing a very special teaching right now. Earlier, for those of you who came in late, because you're used to me coming on late right now, for those of you who came in late, this is the second Facebook Live that I've done tonight. If you go back to the Truth Policy page, earlier tonight, I did my regular live. Tonight, right now, is number 2. Earlier, I did my regular. Right now, I'm doing Stock Market 101. I'm giving y'all a little financial education. I have a financial business. It's called Safe Life Solutions. Okay? Through all my relationships that I have built over the years as a government auditor and in doing all my ministry for Israel, I have learned the ins and outs. I know how the wealthy make money. I know how the system works. I've been a financial analyst all this time, and I'm around people who make money in all these different ways that are secured and solid, and the wealthy are making double-digit returns on their money. And finally, in my relationships, I have relationships with wealth management offices that do investment opportunities with fixed double-digit returns for their high net worth clients. These are usually like $250,000 minimum and up, okay? But they're Christians, and they have a heart, and they say, look, we know our wealthy clients are going to make money, they're going to get these returns, but we want these returns to be available to everybody, so we're going to make it a $25,000 minimum instead of a $250,000 minimum. And yeah, it's a lot more work, because it's split up and runs to much different people. But the fact is, everybody deserves the opportunity to make double-digit fixed interest and get the same returns the wealthy make, because everyone in America deserves a piece of the American dream and to build wealth for their families. It's generational wealth building. It's building wealth to live to your children. It's building wealth to save your retirement. So here it is. And this is why in the live earlier tonight, there's a bunch of you who got out right in the nick of time and didn't lose money today. And now you're making money on your money. And I've got people who've been doing this with me for years, and they're renewing right now. And they're thanking me because they're making money and they're not losing money. Here's the key. Instead of being in mutual funds, instead of being in the stock market, I help people set up a self-directed IRA or a self-directed Roth. It's completely out of the stock market. You do not have all these money managers and gurus and all these people in your money. You take complete control over your money. Nobody makes money on your money but you. This is the way the wealthy do it. This is the way the wealthy have been doing it for decades. It is nothing new. The thing is, you've never heard about it because all those people are making money on you and they don't want you to know this exists. The IRS set up that Ponzi scheme because they can get their taxes later. They're still going to get their taxes when you take it out. Here's the trick. Fidelity doesn't have to make money on you. T. Rowe Price does not have to make money on you. Edward Jones does not have to make money on you. You can make your money all by yourself. I have programs. I have several different ones, but they are all out of the stock market. There is no speculation. That is double-digit fixed interest. You have a contract. You are a bank. You are loaning your money to a very multi-million dollar real estate company so they can complete their projects and do their projects and do what they need to do. They are giving you a contract to pay you fixed interest for a certain amount of time. And every single month you receive that fixed interest. And you can even get a bonus at the end. And I've got another one that pays as short term. It's like a 90-day. Pays high interest. If you have an IRA, that interest is deposited right into your IRA account. Instead of your IRA being attached to stocks and going down and going up a little bit and going down, you know exactly what you're going to get. Every single month you have got a deposit. You can watch your IRA account and you can see the deposit coming in every single month. On the one earlier tonight, Pam was on there thanking me. I've got people put in $100,000. They're making $1,000 a month. Cash. If you need cash flow, if this inflation is driving you crazy and you've got money sitting and it's not making any money, you can use cash and you can have monthly income coming in. It's interest income. You're going to get a 1099-I. You got to pay tax on your interest income. Just like that 1% the bank's paying you. They send you a 1099. You got to pay tax on that. But what if you were making double-digit interest? I don't mind paying tax if I'm making big interest income. I don't mind paying tax on it. If it's in your IRA account, that interest money that you make goes straight into your IRA account. Now your IRA is growing and growing and growing on steroids. You are not attached to the stock market. You do not have the ups and downs. You know exactly what you're going to get. And every single one of the things I offer, because I was a fraud examiner for 25 years, you know I've vetted the heck out of these things. I've got friends that have in them. I've got a lot of friends that have been doing them for a really long time, solid, making money every time, and they are secured with real estate. You are not investing in real estate. It is not profit sharing. It is not a REIT. There's all these REITs being advertised. Guys, REITs are speculation. REIT is you're investing in a real estate project and you're like getting a profit share. If it makes money, you'll make some profit. If it doesn't, you don't. It can go up and down sideways. This is not that. You are not investing in real estate. You are not taking any type of equity position in real estate. You are strictly a lender, lending your money. They are giving you a contract to pay you fixed interest, and they are securing that with collateral with multi-million dollars in real estate equity. They're saying, we're promised. It's just like if you went to the bank and had to take out a loan for your house, except it's the reverse. When you want to take out a loan for your house, you go to the bank and you say, I want to take out a loan on this house. And they say, fine, you're going to sign a contract. You're going to pay us interest. If you default on that, we get to take your house. Okay. Backwards. You're the bank. You have the money. You're loaning the real estate company the money. They're signing a contract to pay you fixed interest that does not change, fixed interest. And if they default, their real estate is sold. It is secured with the equity in that real estate. Their real estate could. This is mega $1 million commercial real estate that's generating revenue every month. They're not going to let it go. They're not going to do that. But that's your security. It's backed up with security. That's what I do. That's what Safe Life Solutions LLC does. I tailor this to the individual, and I make sure you've got an emergency fund in the bank. I go through all your things. I do long-term, big picture planning with you guys. How much Social Security you're going to get, how much are your expenses, what other income are you having coming in, and how much do you need to have coming in every month when you retire? Every single one of y'all need to understand that. Every single one of y'all need to go to socialsecurity.gov. If you don't have an account, you need to open an account. You need to go in and look at your statements that are going to be coming 3 years from now, 5 years from now, 10 years from now. Socialsecurity.gov will tell you exactly, can't believe I'm going this long. Socialsecurity.gov will tell you exactly what your Social Security income is going to be based on how long you've worked and everything. But anyway, it'll say if you start taking Social Security at 65, you'll get this. If you start taking it at 70, you'll get this. If you wait till 72, you'll get this. The longer you wait, the higher it is, and you got that for the rest of your life. Once you kick it in when you start taking it. Your bills every month may be $3,000. Your Social Security may be only $1,500. What are you going to do for that? I mean, your whole living expenses. Where's that other $1,500 coming from? You need to know that, and you need to know that now so you can plan. I can put your money on steroids. I can get it growing. You don't want to run out of money. You don't want to be 75 years old and saying, do you want fries with that? You don't want to be 75 or 80 years old and having to work in Walmart unless you want to. It's kind of fun. I know some people who do it. They enjoy it. Anyway, reach out to me. That's what I do. I wanted to give y'all an understanding of the stock market because some basic fundamentals I wanted you to understand. Number one is because I can help you. My business can help you. Number two, or that might be number two is when you see these conspiracy theories that these people who own these big stock conglomerates and who own companies and stuff, that they're doing something to bring down the United States of America and to cripple the United States and everything, don't believe it. Be careful what you hear. Be careful what you see and what you read and what you believe. Because a lot of that stuff is just not true. Don't screen your ears, screen your eyes, take it to the Lord. I don't mind. I answer y'all's questions all the time. You can send me a message and say, well, hey, what about this? And I'll tell you why it might not be true. But if you understand about corporate ownership, stock market stock, if you go back to the beginning of this and read it, see this, when you hear stuff, you'll know that's not true. Basic fundamental stuff they're not teaching in school. They didn't teach us in school. I had to learn this a hard way. And I got a master's degree in it, so that's the hard way, I guess. And I've been working in financials for decades, but they don't teach this to the kids. They teach the kids to stay with the same company and do your IRA and let somebody else handle everything. They don't tell you this stuff. Anyway, I wanted to share it with you because I love you. You're my family and truth to policy. Have a great night. Yes, this was unusual. This is my Stock Market 101. This is my financial class. If you want my regular live, I did one earlier tonight. So go check it out. Love you guys. I will see you sometime over the weekend. Good night. Oh, if you want to reach me, if you want to set something up, you want to talk to me, you want to do this, Robin@truth2policy.com, Robin@truth2policy.com, TRUTHTOPOLCY.com, or just send me a message in Facebook and give me your email and your phone number. Email and phone number, and we'll talk. Okay, good night.